presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Tampa. Hey, Al, what's going on?
Oh, it's a beautiful thing. I mean, if your listeners don't get the gold report, they're missing out. I mean, with your gold report, you just printing money. I love it.
You're my best ad out there, Al. Let's go to Jeff in New Jersey. Hey, Jeff, what's going on?
Great. Hey, listen, I was calling to thank you. A few weeks ago, you were prompting on your show to fill out that $10,000 grant.
Yes.
So I filled it out, and just a couple days ago, I found $1,000 in my business checking account.
That's awesome, man. That's awesome. Yeah.
And I owe it to you, because if it wasn't for your prompting, I would have just assumed, no way I would have gotten anything. So I wanted to thank you.
No, we appreciate you growling a problem with us here.
Now, Tom O'Brien.
Hi, folks. Basil Chapman sitting in for Tom O'Brien. My pleasure to be here. Dow is up 387, making up more than the loss on Friday. And that's really important because it is hugging the 9-period exponential moving average. I'll talk about that in a moment. It's at 33,864. But to tell you the truth, Friday's close after the Fed speak on Wednesday, after all the CPI, PPI, and all those numbers come out. We want to see on Friday a close in perhaps the 34,100 area. Is that too much to ask? Rather than 33,400 or lower. So let's get to this. We'll look at the S&P. The S&P at this particular point is also up nicely. The S&P is trading. Let me just click on that right there. The S&P is trading at, there we go. S&P is trading at 3973, up 38, also very good. Not the pattern itself is just, it needs a little more to be matching the Dow. I did not put a down arrow, even though it's a peak D. Actually, let me just show this real quickly for those of you who are new to my work. I try to identify the lowest low bar. As soon as it starts to make a higher peak or peaks, I alphabetize them sequentially, A through G, A, B, C, D, E, F, G. If it gets upgraded from a buy signal to a buy mode, it means it should go to at least a D. You'll see how many Ds there are. At least a D can go D, E, or even F. But in the meantime, back at the range, D is where other things can happen. We're only looking at 3 patterns in terms of the direction: straight up, straight down, cup formation where it goes from one point down and then back again. Could be a V or a cup. And an arch formation where it could go from one point up in an inverse V or an arch, come back down. How it tests the low is important. This is red. It looks like a lowercase h because if it goes to a peak A and a B and then fails, takes out this left side low, could go quite a bit lower. And on the right side, the green reverse Y means if it takes out that left side high, it can go quite a bit higher. And one other thing that I'll just show you right now, I usually talk about it, don't often show it. This is going to be really important for the month of December. The long, narrow rectangle or the large rectangle. Yeah, let's go to each one of these things, and I'll show you exactly what I'm looking at. Yes, I will look at Amazon in a moment. Let's just get to this. So the S&P has made this peak D. Remember, the objective in the Chapman wave is to get you to at least a D. But also, I talk about the 200-period exponential moving average. How important is that? Well, you want to know how important it is? Have a look at this. This is the E-mini 1-minute chart. Oops, I lost the letter there, but put it over there. Where does it need to go to? To at least a D. What has this gone to a D in the 1-minute chart? It's gone to a D in the 5-minute chart. It's in a leg D in the 10-minute chart. These are the techniques that I'll be working on. We'll be trading these. We'll be studying them. We'll be looking at a couple of other instruments that we'll use for trading on this coming Thursday. So don't forget, you got your Tiger Dollars today. End of the Tiger Dollar rewards. Can you believe 20 to 40% gain you get on your buying of these dollars? Because if you buy it, you can get up to a 20 or 40% discount. Isn't that great? Oh, we got a caller. Did you say, Al? Let's see. We have. Oh, do we have a caller? No, I didn't have a call. All right, we'll go right back to what we... Hello?
Yes.
We do? Who am I speaking with?
Sam from Philly.
Hi, how are you?
Good. How you doing, Basil?
I'm doing very well. And you'd like to look at?
LU. Lufax Holdings.
How do you... What are the symbols?
It's L as in Larry, U as in unit.
LU. Okay, that is Lufax Holdings?
Yes, sir.
Okay, good. So this is the way I look at this is the most immediate thing is I look at it and I see a W formation. These U or W formations that I was just talking about a moment ago, it looks like that reverse Y in this particular instance has gone from a low of $1.30 on the 24th of October. It went to the requisite peak A, peak B, and then it kind of stalled. Instead of going to C, what happened was it went A, B. I'm just notating from the low bar each successively higher peak, and then it fell and it broke to a lower low. That negates this peak C, becomes a C minus, and that C minus says you've got to restart, and it was uppercase because on the way up you do uppercase. So it restarts, and now it goes peak A, peak B, brand new. I have to put it in. So the stochastic's at 81%, so I can put in an up arrow. It says it should go to at least a D. This is an A right here, that's a peak right there. This is a peak right here, and it's testing it. So today's high is $2.19. $2.19. The last high was $2.35. So it's got a little bit of a way. Are you long this from any position that you can tell me?
Yeah. I own it at $1.63. $1.63.
Okay. So because we're looking at a $2 stock, folks, this is not for everybody. But obviously, in this particular instance, Sam has done his homework. Have you ever traded this before?
Yes, sir. And it gives you actually a good dividend. It has a good earning per share, and the PE is low. The only thing is different is a Chinese company. So,
all right. The fact that it's a Chinese company is an issue. But look, it's survived so far, and it's bounced. It's almost doubled from the low that was just made at $1.26 on the 25th. So in that regard, I'm going to say there's always a risk when you're playing very low price, even low price single digit stocks, because they can go broke. You know that. So what you're doing now is you're looking at it and you're treating it somewhat like an option in the sense that you're saying to yourself, well, it's held in the ones for a while. Even if it pulls back, it should give you an opportunity, hopefully, to get out if it doesn't work. So this is what I like to do. And I'll be teaching this in my course on Thursday. And what I'm doing is I'm showing you bar symmetry. I go to a particular bar, and then I measure the number of bars on the left and the measure of the bars on the right. And if it isn't the exact low, I choose a particular bar to do this. Can you hold on, and I'll give you the results of what I'm looking at.
Yes,
Good.
sir.
We've got Sam in Philly, Dow's up 393, S&P's up 38. This is Basil Chapman. This is the Tom O'Brien Show. I'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're on the line with Sam in Philly. This is Philly, New Jersey, Philadelphia. And we've got, we're looking at LU. LU is the symbol at 213. It's down 17 cents right now. It has a pattern. And so Sam is in from lower down, and it has a pattern that sharp drop to a lower low is a little bit of a concern, but the speed with which it came back says that it was probably market related or something like that for the pullback, and that it's really wanting to push higher. How much higher is a little difficult to say, but the way I've got is a measured move that says by Thursday or Friday, if it's able in the interim period to close above not yesterday's high, but the high of the 5th, which was $2.35. My target then would be, number one would be $2.39, the high of the 15th. But actually, the real target would be this whole area here between the 10th of October, which was at 250, and above that is 267. All of that says you at this particular point, speed is the most important thing. If it stalls here, then it can go into a little mini rectangle formation. I'll just draw that in right now and say, uh-oh, it's going to go to the upper part and the lower part of this particular band. And if it closes underneath the low of a few days ago in the the 1.88 area, that says it's stalled. And it's probably going to take a lot longer to get through. So what I'm saying is today's Monday. If by Tuesday afternoon or Wednesday by noon time, Eastern time, it's able to even touch the high of yesterday, which was 235, that is a really good sign. I'm not sure quite why it's pulling back today. Let me just check the FXI to see if it's China related. Yeah, the FXI is down. It failed at the 200-period moving average. Yeah, so that's what I'm looking at. And I have to tell you that the way that it's basing, if you have patience, and this doesn't close any day in the next week and a half under, say, 170, but it's able to hold here, it could have a very nice one-to-one to the 253 area. So I hope that helps you.
Thank you very much.
My pleasure. So, folks, what I wanted to do right at this particular point is this. I wanted to finish. We were looking at the gold. I want to look at the GDX. The GDX is pulling back. Remember I spoke about the 200-period moving average. Look how important the 200-period moving average is. It doesn't matter. He has a daily chart. He has the E-mini. Let me just go to this. This is the 1-minute chart. And this is what I'm going to be doing Thursday. I'm going to be using all these particular benchmarks to say, can it rally? While Dave White was doing his fabulous show, I was saying, oh, don't do it now. Wait. Because we had gotten to a peak B and pulled back. And I thought, I've got another cup formation. And it rallied off the 200 period moving. Look, this is the 1 minute chart of the March E-mini. 1 minute chart. And look how fantastic that rally off the 200 period moving average is. I mean, these are things I'm going to be talking about. We're going to be trading. We're going to do this on Thursday all day. You can use your Tiger Dollars. You get a month of my opening call, daily service. You can email me any old time. You get my archives. Those archives alone are worth a bundle. So just think of this. You get my newsletter for free. You have to pay, what's it, $2.95, I think it is. So it's a chunk of that. And you get the service. And you get the webinar. And hopefully it's a trading one that makes money, because that's what the objective I try to do. And you are in leg E at 46.50. You've just gone in the 5 minute chart from the peak D, started a new E. You've gone in the 10 minute chart from in a leg D extension. And let me just show you this here while I'm talking about it. There's one particular technique. Oh, I wish this was live. We're live trading right now. With this one technique let me go back here. Let me show you something. Using just one particular moving average, if you had used this to go to get a buy, to take the buy signal at, there were many, but I'm just taking the last one, at 14:38. That's 2:38 this afternoon, and about less than an hour ago, you could have still been holding this, and let's go to the high of that bar, which is 39.95. You're trading at 4,016, and that moving average hasn't given you a sell signal yet. And even though, using my own technique, a peak D, look how many peak Ds we've got. There's a peak D. I would have said, oops, be a little careful. It held fantastically and went to another peak D with a doji candle. I always say, oh, be careful. If you just stuck with this one principle, you'd still be long. So let's go to the 200 period moving average in this particular chart right here. Here's the GDX. It went above it. This is the market vectors gold minus ETF. And look at this. It was repelled at a peak D back in May, right here at about 34. It made a peak E at 41.61 on the 18th of April and came straight down. I showed the measured move to the 200 period moving average. It stalled there, pulled back, went back, couldn't break above it, stalled there and did a 1-to-1 to the downside. And look at this. It went down to 21.52, almost cut in half, the 26th of September, and then it started to move up. And the green, we've gone green right there, if you want to be as strict as you can, on the 11th. Let's do the next day, the 7th of November, in the 24.65 area. And here you are at 28.91, having just made a peak F. And you're stuck again at the 200 period exponential moving average. Will this become a propellant or a magnet or a repellent? So that's why I'm saying, just for the subscribers to my opening call, we're kind of staying away right at this moment. We're staying away from the gold. We're going to stay away from the silver. Although silver, look at this, SI has done way better. Look how far it is away from the 200 period exponential moving average. Look at this beautiful propellant to peak A, B, C, and it went to a D right there. This is a peak D today, because I don't think by the end of the day, in another 35 minutes, it's going to go and retest the 23.90 level of yesterday. But it isn't showing any signs yet of weakness, except if you look really carefully, you'll see that the on-balance volume is a tad overbought. And that just says leg D in the weekly chart, leg D in the daily chart. There's a chance that you do get some kind of a pullback here, but the strength is really good. 90 in the stochastic is outstanding for the weekly chart. MACD is good. Daily is just a tad overbought right now. So the 22, it's at 23.50. The 22.20 to 22.20 to about 21.80 should be very good support if there is a pullback. Let's look at the dollar. The dollar's trying to rally. Now, I want to talk about you remember the bar symmetry? And I was talking about bar symmetry before, but look, 104.64 subscribers have been long the dollar since 2018. Watched it go all the way to the 121 area, come all the way down, but our stop on the UUP held. So we're still long. We've taken a little bits off, and it hit 114 at peak D right there on the 28th of September. Look at the measured move to the right. I used the double top as a measure, and look at this. It went 104.64 the other day. 6 days ago, it went down to 104.11. Came within 60 cents, and now it's stalling at the 200-period exponential moving average. EUR, USD, that's the euro. Look at that, just above. Has it gone to a peak D yet? Not quite. I'll be back in a moment. Basil Chapman sitting in for Tom O'Brien. We're up 470.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back. So the euro dollar went above the 200-period moving average for a whole chunk of like 2 months back in 2021. Look at all the price movement there. And then it stalled. And then it took out that 200-period moving average on right there on the 16th of June at about 1.2, 1.199. And you know what? It got it close a few times, but it never got to it. And my rule of thumb is as it gets really close, especially the second time, that's where it breaks out to the upside, or that's where it tests it, and that's the first time that you can get a sense of maybe things have changed. Maybe the tide has changed. Well, wait a minute. Look at this. Not once. Look at this chart. Not once has it got even close to that orangey line right there, and then all of a sudden it gets close, hits it at a peak F, pulls back, goes to peak A, peak B, and we're making a peak C1, C2 right now that acts a little bit like a D. But for the first time, we're trading for a couple of weeks above that 200-period moving average. That's really good action because it says now that you've created a good bit of support just under it, but it is a magnet. And to get away from it, you need to push and propel back to about the 107, 108 area. Haven't done it yet, but that's what I'm looking at. Look at the USD JPY right here. That's this is the yen, and nothing, no 200 period moving average since it almost touched it back in March of this year. But I'm going to go back probably to the same thing, back to 2021. Well, I don't want to go back. Anyway, for all of 2021, it just never got there. And now all of a sudden, it's gone to this high that was made just recently. I'm scrolling. I hope you're not getting giddy. It went to a peak D right there, that big candle. There's the rectangle. How important are these rectangle formations? How important is this dreaded H pattern, the lowercase h, that red one? You remember, it takes out the left side low. Took it out, and kaboom, kaboom. And it goes where? Look at the beautiful match of the, this is the bar symmetry from the left to the right. This is the larger bar symmetry from back in July, August of this past year, to a particular midpoint that I had to choose because it wasn't a very obvious one. I used a particular candle, and moves to the right. And yesterday was the low that should have been tested. It tested it about 6 days ago at 1.3363. This is a continuous contract, so the price will change. The one that we were looking at was the low from about August. Was it July? Yeah, it was August the 2nd. Happy birthday. August the 2nd was the low of 130.42. So isn't that interesting? And now it's attempting to get above those moving averages. Look at silver. Silver gone nicely above the moving averages, and that's important. And now let's go to high-grade copper. This is the daily chart I'm showing. Look at this cup formation. Creates another cup formation that's almost like LU, the stock we were talking about with Sam in Philly just a moment ago. I'm talking about only the pattern, not price, nothing else. And now look what's happened. It keeps making a little bit of a higher high above the 200 period moving average, but until high-grade copper really gets to the 4.1 area, 4.15, I think it's going to be stuck here for a little bit. So I just wanted to show you the power of some of these tools that I'll be talking about. And it's so easy. You put them on the chart. I don't have to use it until I have to use it. There's nothing to do. I don't have to measure. I don't have to do anything. The other thing is, I was asked about Amazon. Now look at this. This is very interesting. Amazon, right, the season of giving. It's not acting very well. And look at the bar symmetry from, oops, that moved over there. That should have been right there. From the high of the July of 2021 at 188.65 to the low of 81.30 in March of 2020. If you create that as your midpoint, we're one bar late, but it went almost, 81.30 was the target on the downside. It went to 85.87 from 188. It knocked off over $100 to get there. And in the time symmetry, it says it's one bar late. It could still do it, but the unbalanced volume is now in the monthly chart very, very weak. The daily chart has tried to rally, but not very well. So I suspect that Amazon at this particular point has to break 95.80. Let's call it 96.30. If it can close above that in the next, today's Monday, by Thursday afternoon, Friday morning, that is going to be really good action. If it slides and it takes out 87 support, that's not good because it'll be retesting that low that was made on the 9th of November at 85.87. So I look at this and I say, I can make a large rectangle formation, but that's being a little bit too generous. I have to make a small one and say, this is the range that we're looking at. Amazon, this is the season where Amazon should be doing fantastically. I think there's a lot of competition out there. So that's what I'm looking at. Amazon's stuck in a range for now. It has to prove itself. That's the most important thing. Next question. Well, there was a question that came in and I wrote it down. Let me just see. No, it wasn't there. It was over there. Oh, XLE. Yeah. So I think that XLE, I had this on my show, the Tiger Technicians Hour this morning. Oh, don't forget, folks, my newsletter is the opening call, daily newsletter. And here we are with XLE, a nice candle today, but not after Friday's big move down. I still, everything about this says it went into the large rectangle formation and made the cup the V-shaped pattern, and then that dreaded H pattern that went to a peak A and failed. This is in a leg B, probably a trough B today. I think there's more digestive action to be done in the XLE, and I would not be surprised if the 200-period moving average of 78 becomes some kind of a target. It's not a big deal. I mean, you're at 84. You've had a spectacular move to 94 from the 67s. You can give back about half of it. Look, 200-period moving average was a propellant zone. It kept going below it, rallied, and then back under it, peak D. There's another peak D, then rallied, went to this unusual peak G at 94.71, and now it's just arching over, and it looks to me like in another, well, maybe it has to hold the 80.41 level first. If it takes that out, then this 200-period moving average becomes a target. It's not a big deal. It's just a big digestive phase. What is a big deal is that the XLE in S&P Select Energy Spider Fund in the monthly chart has made a doji candle, first doji candle on the way up here at the very high. 93.31 was the first high and 84.71 within a point and a half. It makes a double top. I think you got to be careful. Little doji candle there. MACD, stochastic, those are all doing okay right now, but I'm watching it very closely. Let's do this here. We've got ITA. Question came in the other day about the ITA, and again now. The ITA is the iShares U.S. Aerospace and Defense ETF. The PPA is the same thing, but it's just another one. This is the Invesco Aerospace and Defense portfolio. Look, that has gone to a D in the monthly chart. It's only a C, and it's gone to, look at this. These double tops are unbelievable. 80 round number high the week of the 25th of March, pulls back all the way to the 64s, rallies back up. And what does it do? It goes to 80.40, I think it was, 80.43 5 days ago. These double tops are quite incredible. And now it's holding very well, but here's the potential for a rectangle formation. And what I like to say is look at the vertical aspect. Look at the technicals at peak D right there. Look at this. This is the PPA. The ITA is the same. And look, the MACD was very good. Stochastic was pretty good in the 85 area. On-balance volume was good. Now the on-balance volume is really good, but the MACD's turned down. Stochastic's way, way low at 27%. And the 9 is just really close to turning down. So I would say that we're looking at a lot of very good areas over the last many weeks. Maybe stalling right now, and we want to see...
The TFNN Holiday Tiger Dollar Sale is running this week only. We've doubled our normal bonuses where you can now get up to a 40% bonus on your purchase, and all purchases also receive a TFNN Tiger Mug. Tiger Dollars are good for all TFNN newsletters, trading webinars, and services, so they're a great way to lock in added savings. Don't miss the TFNN Holiday Tiger Dollar Sale, which ends this Monday, December 12th. For all the details, visit the front page of TFNN.com today.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Sign up for Basil's live webinar airing this Thursday, December 15th. Basil Chapman will be hosting his first ever live trading webinar just in time for the holiday season. While Basil will focus on the S&P E-mini futures, other symbols from gold, crude oil to natural gas and more will be traded as appropriate. Basil will demonstrate specific Chapman wave techniques as well as answer questions live. Spots are limited and Basil goes live Thursday, December 15th. You don't want to miss it. To sign up, visit the front page of TFNN.com. TFNN, educating investors. This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi, folks. Basil Chapman. You're sitting in for Tom O'Brien. We're looking at the E-mini up at, I call this a peak D. Let me show you. So the objective in the Chapman way, let's just go through this again. Remember, I like to always show the chart. Let me just do this real quickly. From an identifiable low bar, I count each successively higher peak. The objective is, if you go from a buy signal to a buy mode, you want to call it a buy mode that can go to at least a D. It can go higher, but it takes you to at least the fourth highest peak. At D, other things can happen. I don't want to spend time on that. I'll do that in my show tomorrow at 10 o'clock in my Tiger Technicians Hour. So look what happened. This is the 1 minute chart. It's about to turn down and maybe cross negative, and that means that that buy that we were talking about, and what did I say it was, 39, what was it earlier on, it was right there, at 39.93, has gone to 4,000 and, look at this, 4,023. Now, you'll see each one of these turns out to be a peak D, and then it continues higher, peak D, and it continues higher. So you'll see this red. I'm going to teach you how there are times, because you're dealing with the futures which move in 25-cent increments. Every once in a while, there's a particular technique I use that says, use a phantom peak. You know it's not a peak because it was exact parallel highs, but you can use it to say, if that's a C, you want to be at a D quicker, because otherwise this would be the C right here. And I just sit there waiting. But this gives me a heads up and says, start taking something off, because this could be the real D. And lo and behold, there's the D. It's pulled back. And for the first time since that crossover, look, there's the day's young. This is an S. It could change within another 30 seconds. But that S says that this moving average has crossed negative. It hasn't closed. You got to wait for the full bar. But if it does that, you could start the pullback. And why would I be concerned? Because there's a doji candle. I have just 3 or 4 specific candles that I look at all the time. I'll be teaching those. And there it is, peak E, and you're pulling back. There's your D, and you're pulling back. So those are techniques. This is live. So there's nothing here, made up. There's nothing I can change. That's what it is. So those are the things we'll be doing and trading them based on these techniques. UNG was a question, United States Natural Gas Fund. So I said to subscribers, we've missed it. I should have bought. There's no reason why we couldn't have got it. We've done it before. Going to that peak D, we took nice profits in that move to 24.61 in the UNG, which is the natural gas, U.S. Natural Gas Fund. And then it just tanked. And we watched it and waited. And I spoke about it right here. It hit a low of 16.33. And I was about to give a buy signal. I thought, I've got other things we're looking at. I need to be clear. Otherwise, if there's a little fuzziness, it means that you aren't really sure. And I wasn't. Everything was there to go long, and we didn't. And the next day it gapped up. I thought if there was a bit of a pullback here, that would be important. But if this is a V shape, there won't be any chance. Well, today we got that third big gap up. Actually, it was really kind of the fourth. And this is the one I said is going to, this morning when we were doing my show, I said, this is one I think we're going to be pulling back by the end of the day. I was going to say that if this was the trading day, I would have wanted to short it. Let me see. Let's go to this 10-minute chart, based on this particular pattern. Let's see, at NG, this would be the continuous contract. All right, if I had a chance, it's peak A, peak B, peak C. There's your peak D right there. That might have given us a chance to wait until it crossed negative, and that would have been a nice look to the 200 period moving average. We didn't do it, so you can't talk about something you haven't done. Have a look at this. Oops, ESH23. Got to get used to the 2023 level. So we have pulled back from the peak D quite sharply. We're underneath that low that was right there. So we're watching that closely. In the meantime, back at the ranch, I don't want to miss out on anything. I've written down all the stuff. Oh, question about Oracle. Look at this. This is Oracle chart going up right now. OORCL. Have a look at that chart. What have I been talking about? I've been talking about the 200 period moving average. It went above the 200 period moving average. It actually, in the daily chart, it went to this cup formation. This is the plumb line. I'm going to be teaching about this. Here's the plumb line right there. But whoops, the exact low was the plumb line. I must put this over one bar. Sorry, one bar. And what did it do? It went from that peak D over the 200 period moving average, couldn't stand it, hadn't been there for ages, got there, couldn't take it, plummeted down to 60 from the 70-something area, and went right back, went to a peak C, pulls back, and then went to a D 3 bars late. Sorry about that, but 3 bars late in this price-time match. I call it bar symmetry. And then it went above the 200 period moving average, continuing peak D, E, F, /C. I've got to put the /C because you haven't got any real technical saying that this is a peak F, and it could have held nicely and bounced to slightly retest the highs. It hasn't yet. 84.53. Got earnings coming out after the bell. I don't want to guess what the market does. I don't want to guess what they say. I do want to say that at 84.53, if this week by Friday it actually closes even once above 84.53 to make that missing leg D, that's going to be really good action because it's further and further away from the 200 period moving average. Oracle does cloud-based solutions, database. If it pulls back and by Wednesday, it's trading under 77.50, that 200 period moving average of 75.70 gets retested. So this is a very important moment for Oracle because it's done very well. Look at the weekly chart. The weekly chart went to this midpoint and it went to peak B and it's pulling back, and the monthly chart is improved. So I just wanted to say, if you're thinking about cloud-based, look at fantastic IBM. It has just done a superb job. Look at this. 151.63 was the high way back in 2020, the beginning of 2020. And 150.46 was the high on November the 23rd, 2022. And these matching price points are just fascinating. How it gets there, how it remembers is quite something. But IBM is the real cloud and enterprise and AI company at this particular point, because look at CRM. Salesforce.com. Look, it's the exact opposite. Lower lows and lower highs and lower highs. It's getting very close to another bounce attempt, but wow, what a beating it's taken. Question came up about the TLT. Look, TLT, not LTL. TLT made a peak. G/C, it's pulling back. If you look at this particular pattern right here, look at this bar symmetry. So it made a low of 133.19 back in, I think it was April of this year, rallies to 152.72, makes this cup formation, and I usually like to take the low of the cup if it makes a right side price time match, and this one was a little late, but it went to 155.12, just above that previous high with much weaker technicals. Look at this. And then it came back. Look at this price time match to the exact day, the 13th of May, 112.62. Well, sorry, it was this one right here. The exact day was 130.32. 3 points away from that low over there in a bar symmetry. And then it broke down and did the one-to-one to the downside. So this is really important that the TLT Rallies, yeah, this is going to be tough stuff. I'll be back in a moment. Basil Chapman sitting for Tom O'Brien. Dow's at 460. We'll be right back.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks, we're back. So you can see we're learning about this one technique to use a phantom peak, where to use it and how to use it. Look at that. We hit the high of 40.23.25 in the March contract of the E-mini, and it slid all of a sudden down to 415, straightening out 4,018. So these are techniques that we'll be discussing in very great detail. So for my subscribers to my opening goal, we're still long a core position from our low, the low of 2020 on the 23rd of March. We started longs. We still got some of those. And we're still long from the low that was made just here, the day after the low in October. And we also added the 3 times long. But I'm quite prepared. It depends on the action in the next couple of days to add back. We had the SPXS, which is 3 times short, have a small position to kind of counter any long positions. I'm quite prepared to put it on. Haven't yet. We're watching this very closely. So that's for, and thank you to subscribers. People who have already started signing up for my webinar on Thursday. You do get my opening call, my newsletter. It starts immediately as soon as you sign up. So if you have any questions, just send them to me, Basil Chapman at TFNN.com. In the meantime, back at the ranch, look at this rebound coming up here. This is buying a very good comment in the den about maybe Friday. not to be long, the big banks and brokerage houses were getting out of certain positions on Friday, or putting on some positions. But in the meantime, big positions were made, and today on the move up, they're getting prepared for a very volatile couple of days, especially with the Fed coming up. So with that said, this is the last day of the Tiger sale. It is a fantastic sale. And then don't forget, if I can find this in the split second that we've got, there it is. So I have this there here, Tiger TV. Where did it go? Oh, I wanted to show it. I'm not very good at this. All right, there we go. Yeah, so this is it. Go to the front page of TFNN. If you have a chance, you're interested, it isn't just day trading. I'm trying to show you proper moves because I'm using a short time, that's all, to do the same thing that you do for daily, weekly, monthly charts. So Basil Chapman live trading webinar, E-mini S&P Futures Focus. We'll do other things as well this coming Thursday. Hope you can sign up. Have a wonderful rest of the day, and Tom will be back tomorrow. Basil Chapman signing off. Dow is up 505.